Hello everybody, welcome to another update on the stock screener. Today we are going to talk about Capstone Mining due to a lot of demand for a new video here. They released earnings and you can see that Capstone Mining has been rising slowly because it's just following the copper price, and you can see that the copper price is rising the same way as Capstone Mining is rising. So this is a perfect proxy for copper prices. So that's why we need to look at copper first. So what's the status on copper? You can see the Killian-Zhao Real Economy Index has been dropping a bit, but it's still positive. So yeah, that could be some weakness in copper, but I think it will keep on rising slowly. Then we look at the 10-year yield, which is correlated to the copper gold ratio. 10-year yield has been rising, which says that there is growth. So that means that copper will probably also rise. The LME stock levels are very low. So that means, look at this. Stock levels are at almost historic low at the LME. And at the COMEX, it's not that easy to see, but I think this is also going lower. So that means that we have very low stockpiles of copper. And this is how it is globally. So we dropped until December to around 300,000, and now we are at 600,000. So that means that this chart went like this, and we are now at 600,000. So that's still historically very low. It's lower than every other year. And you can see that here as well. 600,000 is lower than all years from 2010 to 2021. So we have very low stockpiles of copper. That means that probability of copper going higher is very high. Okay. Power consumption is stable, but it's dropping a bit. So don't expect copper to shoot higher. It will just slowly rise. An important number here is the 6-month credit impulse, which is rising. So I expect that copper will do well in the coming months. China, let's look at that. We still see this triangle pattern, and we still need to wait for the breakout, but I think it will come. I think we will see the breakout. So that's good for copper. And GDP is rising again. So 1% quarter-over-quarter growth. So that looks good. We also have a blockade at the Las Bambas copper mine. So that's also good for copper. Still have this deficit between copper production and demand. Seasonality is very good. We are now here and it will rise until May. So perfect time to buy Capstone Mining. Shipping rates were also very good. As you can see here, we see a tick up again. So that means there is economic activity for iron ore, copper, grains. So it's looking very well. And inflation is stable. Yeah, Danish forecasts. I know we are going to be flat here this year, so don't expect huge increases. It will be very volatile, but in the next years we will go higher. So I don't expect a plunge in the stock market. It will just be flat and rise until next year. Rents are up, so the housing market is strong, and here we are flat. Okay, so it looks very good for copper, so that's why we keep on investing in the copper sector. Now let's take a look at the financials. So Capstone had net income, where does it say that? Net income is 250 million for 2021 and 40 million for Q4. And adjusted is 70 million. Net income, 70 million. So if you do this times 4, it's 280 million. 280 million. And the market cap is 1.9. So that's about a PE of 6 to 7, right? Yep. So we have a PE of 6 to 7. So that's very cheap. Now, there are so many numbers here. What do we look at? What's the most important to look at? So most important is production. So what is the production doing? And what are the costs? Those are the two numbers that we need to look at. So Q4, what was the production? That's this here, 51 million pounds. So let's put this in the chart. 51, 37, and 14. So as you can see here, Cozamin is stable and rising. And Pinto Valley has had a very good quarter. I think it's even higher than, yeah, it's higher than in March. So this is a record quarter. Very good. Record production 51.6. So this is what I want to see. Higher production. Very good. If you look at Sierra Metals, just as a comparison, what's the production here? This is the production profile. It's going down. Very bad. So I sold it. This is how it should be going up. So very good on production level. Now let's look at the costs. Costs are 1.72. C1 cost, so this is not AISC, this is cash costs. So 1.72, that's this here, 1.72, and I add 0.4 to it to get to AISC. So AISC is around 2.12, which is very good, better than Sierra Metals, which has an AISC of around 3.5 right now. So there's plenty of margin here. Copper is at 4.5 and AIC is at 2. So that's 50%, 50%, more than 50% profit margin, EBITDA margin. So very good numbers. And what do we look at more? We look at, of course, the guidance. Guidance, where is the guidance? Here's the guidance. So we have around 90,000 tons, and 90,000 tons is about around 200 million pounds. So they guided a bit lower than the current production, but they're probably just under promising and over delivering. So I wouldn't worry about that. But the production will be stable going forward. The cash costs 1.8 to 2, 1.8 to 2, and yeah, it's a bit higher. So the cash cost will be a bit higher, but that's because we have inflation, of course. Fuel prices are going up, everything is going up, so we are in an inflationary environment. So other than that, I don't see any new updates. A thing that we need to watch is the Santo Domingo project. So they are going to do a new study with Mantos Copper to see if there are synergies. So that's the new catalyst right now. And other than that, you can listen to their webcasts. Very interesting to watch, to listen to. Okay, so where do we stand on a valuation perspective? We are currently at 3 billion market cap if we count Mantos Copper with it. And there is still upside of about 10%. And of course, in 2 years, we are still going to double and triple. So just keep on holding this stock. There's plenty of upsides, and production is doing very well. Let's take a look at the financials. That's also something we need to look at. So revenue was up due to the higher production, and we have net income here 40 million, but adjusted it's 70 million. So 70 million is about here. So actually this should be somewhere here. And that's because there were stock-based compensations. So adjusted, it will be higher, the net income at 70 million. So equity is rising. Just hold it. It will keep on rising. And in 2 years from now, this will shoot higher due to the higher production coming from Mantos Copper. And you can see that here. So today we have combined 380 million pounds. In 2 years, it will go double to almost 600 million, and then it will triple to 800 millions. So AISC is going to go lower, and that will triple the stock price. They just need to execute, and that will be it. Okay, so let's take a final look at the market cap, 1.9 billion. So if we take 1.9 billion here, which is standalone Capstone Mining without Mantos, then you can see here PE is 6.6 and EBITDA, price to EBITDA 4.4. So that's undervalued. It could go up 50% easily to go to a PE of 10. So earnings, I have added adjusted earnings 70 million times 4. And you can see here that PE is 7. Okay. So plenty of upside. This was an update on Capstone Mining, and I'll see you in the next video. Bye.